What's up, guys? This is Crypto James talking to you today about ApolloX. I think this currency is undervalued as hell. And I want to get into why exactly. Before I do, as always, I update the spreadsheet. The first 26 coins I've spoke about on YouTube. I thought would crush it in this cycle. If you invested $100 to each one when I released the videos and you're still holding that crypto, you'd be in profit for over 59 grand. It's not what I hold anymore. If you want to see what I hold, you can come check out Copy My Crypto. It's where I share my portfolio. Every coin I buy, every coin I sell. If you want to match the gains of myself and the members, then you will want to click the link in the description. We had an amazing 2021, and I think 2022 is going to be even better. Something I do keep banging on about, and I will continue to do so, is a bear cycle will come sometime, probably this year. And when it does happen and we have that massive level of correction, probably maybe not as deep as we've had previously, we're going to see a number of cryptos be hugely undervalued considering the proposition that they offer. I've got a list of cryptos that I've got my eye on that I think could that have huge potential. So I'm going to be watching how much they drop in value, how close they are to fulfilling their roadmap, the partnerships that they create. If you want, and I'm going to share those cryptos with the Copy My Crypto members when I think they can 40, 50, 100x. So if you want to be a part of that, click the link in the description, guys, and check it out. Now, ApolloX is a crypto that is native to the ApolloX trading platform. ApolloX is the first centralized exchange and decentralized exchange hybrid derivatives exchange. So it went live in September of 2021, and it offers trading of perpetual contracts. And the DEX was officially launched in November. In December, ApolloX launched the APX token, which is its native token. Circulates a total supply of 10 billion, 2.5% allocated for trading on PancakeSwap, but the bulk of the supply will be allocated into trading rewards and ApolloX community treasury. The whole idea is to provide accessibility and anonymity to derivatives trading for new and experienced traders, and users are free to trade USDT-based perpetual contracts with up to 100x leverage. Both the centralized exchange and decentralized exchange offers, two-factor authentication and address whitelisting. Now, this as a coin has a lot of potential because fundamentally ApolloX is doing good volume. 24-hour volume, 315 million. So you bear in mind they're doing that kind of volume. Market cap is a tenth of that, not even. 30 million or 30.6 million. Now, within their centralized exchange, and you can flick between the two, a decentralized exchange right here. And what you get for utilizing this, and the decentralized exchange has got an order book like the centralized exchange, which I quite like. But they've got sort of the referral centers and reward centers. So if you're a experienced trader, you can share this with, and you use this, you can share this with a friend, that's also a trader, and you'll get yourself some rewards. The utility for the token itself is pretty good. So there's no team allocation or pre-mining. It boosts trading rewards, pays trading fees as well. Plus there's a 1% burn on every transaction. So literally on the 11th of January, there was like 150 million of these tokens that will burn off. So already that supply is going to decrease. So that's pretty good, right? Now, the only issue down the line, and there's definitely an issue, is this 100x leverage situation. Within crypto at the moment, the one thing that is a real focal point, particularly with regards to sort of your SEC, is this stopping of Wild West leverage trading. And what we've seen across the board from most centralized exchanges is a drop in the amount of leverage that you can actually use. Most places are like, you can no longer use 100x leverage. It's 20x. is where most have sort of drew the line now. So ApolloX could end up in a problem in that regard, because fundamentally the issue that they're going to have is that if your institution like your SEC starts clamping down on leverage trading, that's going to be a problem. But as long as they drop it down to what's required, probably should be able to get away with that without too much issue, unless they've because if they change any rules about leverage trading, they can't go back retrospectively to punish. So ApolloX would just have to adapt fast. So the bulk of the tokens are minted via trading rewards on ApolloX. When it was created, there were 45% went to community treasury, 44% went to users as trading rewards, 5% went to marketing partnerships, and 3.5% to retroactive mining, and 2.5% to list on PancakeSwap. And there's, like I say, a 1% tax on every transaction, but that means that you've got a deflationary currency that's also the currency that fuels the economy behind what is a fairly active centralized, CEX and DEX. So there is actually a lot of potential here. Now, one thing you have to bear in mind is the futures market and the derivatives market is so much bigger than the underlying asset market. So when you look at the stock market's obviously massive, but the derivatives of the stocks is far greater. You're talking about $quadrillion traded per year in derivatives markets. So they are an inevitability that they will grow to significant degrees. We've already seen it really with Bitcoin futures, Ethereum futures are there as well. So the growth of derivatives within crypto is going to be massive. Like, it's insane. The trading volume on derivatives will end up being far greater than the spot trading volume on a lot of these assets down the line, because that's what happens. So an exchange like ApolloX, there is huge benefit here, because fundamentally, if you start seeing massive amounts of money going through ApolloX, the people that are using it will make sure they're buying up ApolloX to minimize the fees that they have to deal with. Because if you're doing $1 million trades, $2 million trades, you don't want to be paying fees. So ApolloX can resolve that for you. So I'm not certain the level that this could run to in terms of price, but I don't see why we wouldn't see $1 billion asset here, because the derivatives market's so big, and it's when you realize how small the derivatives market of crypto is compared to where it's going to be. Your FTXs having massive success and will continue to do so, but they need competitors, and ApolloX could legitimately be a decent competitor, which means then the token itself can grow substantially in value. Now, right now, you're talking about a $430 million circulating supply. Depending on the speed with which we see an uptake in ApolloX, we should be able to see $1 a coin. But that also depends on the distribution within the actual rewards for trading. But even if it was a matter of 2 or 3 years down the line, I would be expecting that we would see Apollo as a $500 million asset, if not $1 billion asset. So obviously that depends on the circulating supply, but there should be some significant growth here, because once crypto regulation comes in, once we start seeing more money flooding into the markets, and we've already seen that with Russia, we will see that with America soon enough. The traders go to derivatives. FTX will get a hell of a lot. They already have a lot within this space, but there will be competitors that will grow as a result when day traders, future traders, derivative traders start coming into the market. ApolloX could really take up a lot of could take up a decent, market share. So down the line, this to me has huge room for growth. What you want to start seeing though is more functionality with the ApolloX token, but bear in mind they've been up and running. Really, the token's only been around since November? Not even November, December. So it's only been up and running for 2 months. So what we would want to start seeing is benefits of the ApolloX token beyond just the trading. Whether that's a sort of earn mechanism or a staking like within Binance, there's earn mechanisms, whether it's launch pads or hard stakes, flexible staking, flexible saving, and all that. So we want to start seeing that incorporated. And if we see that, then we should see some massive room for growth. So yeah, that's it really. Start seeing some earning mechanisms down the line, and a huge growth in derivatives trading, which is inevitable. And all of a sudden, ApolloX, the token itself, could grow at a really impressive rate. Because bear in mind, they've been up and running for a few months now, and that trading volume is solid. It's really solid, and it will grow. So this is one I'd have my eye on, particularly with sort of imminent moves being made in America regarding regulation and everything else. Because, like I said, when that comes into place and there's clarity around crypto, all of a sudden day traders and derivatives traders are in the market, and you're talking about more money than we've ever seen in crypto rolling in. So your FTXs, your ApolloXs are going to have some success there. This is one to have your eye on. Anyway, that's it from me. I hope you're all keeping very, very well on this lovely day. If you're new to crypto, come check out Copy My Crypto. Or even if you've been in crypto a while, check it out. We've had awesome wins throughout 2021. It was a wonderful year. And 2022 is set to be even better. Like I said it before, I say it again. Bear cycle will come. And that's the opportunity to get in on cryptos at huge discounts. I found Phantom in the bear cycle, and there are a number of cryptos that I think tick the boxes that Phantom tick for me. So when I think that this market, when I think they've retraced enough that the gains can be made, those 50x's, 100x's, 200x's, I'm going to be sharing them with the Copy My Crypto members. So if you want to be a part of it, click the link in the description and check it out. All right, take it easy. Bye-bye.